So late last week, Trump threatened a sweeping 50% tariff on the European Union and a 25% tariff on Apple if they failed to move iPhone manufacturing to the US. So big news. Obviously, the market saw a bit of a tumble, but I do want to go over a variety of things. Some of the data today from Bloomberg, along with Flow, as well as the technicals, because there's actually an interesting continuation set up to what I spoke about last week in that video. So starting off here, first of all, call options relative to puts are at the highest level since February. So you can see here there is some type of complacency just because a lot more call frenzy compared to all the puts, the protection people were adding back in March during the tariff fiasco as well as early April. So definitely something good to note there. You can see over here the put to call ratio super low on the put side relative to what we had seen again in late March, early April, where we saw that major spike over 1, as you can see over here on Bloomberg. So again, another sign of complacency in the markets. And then also here, sentiment wise, this is another complacency sign. We finally made it majority bullish. It's been months. I think it was like early February, the last time that we had majority bullish in terms of overall investor sentiment. And you can see here that it had been all the way up to 59.3%, 51.5% in previous weeks. And this wasn't even the brunt of the tariff fears. Again, that was back in early April, late March. So this was just coming out of it. And you can see now it is pretty neutral at the moment, 37% to 36%. So that's one other factor. Also over here, thought this was interesting because ETF inflows, which is basically the measure of the net amount of money flowing in and out of an exchange traded fund. So like S&P 500, these were up 33% year over year to a new record high pace of $620.5 billion through the first 4 months of 2025. So these types of inflows have never been seen in the market before ever in terms of ETFs. Obviously, there's more ETFs now than there were in previous years. However, still relatively a larger amount, even with having some more ETFs in the market. So this has seen a tremendous growth overall in terms of inflows. And that also is a sign of retail participation, which hence why I have this over here. We saw the largest amount of retail inflows last week on the morning session. So you could see a huge spike over here. Retail has been buying the dip hand over fist, so to speak. This is an unparalleled amount of retail inflow compared to anything we've ever seen before. So definitely something to note. And all of this, the accumulation of all of this is there's a lot of activity to the bull side right now. Sentiment has definitely flipped to more so bullish. I'm going to show you guys some other important news next as well. So it's not only retail that is majority bullish. We can see over here, Morgan Stanley actually said buy any dip in US stocks after Moody's cut. And you can see a very quick upside move thereafter. Now this did end up falling lower later on in the week, which I'll get into in a second, but I thought this was interesting. Morgan Stanley, by the way, has a 6,500 price target for the S&P 500 later this year. So interestingly enough, that's actually on par with the majority of Wall Street right now for the average year-end price target. So even though that may sound excessive, considering we're trading at about 5,800 right now, that is on par with the rest of Wall Street's updated targets. So that's important to note there. Also, early on in the week, the UNH whales, they are up quite a bit. If you remember here, they added near this dip, and I can click on this picture to show you, but they added on this dip basically near low, their millions worth of call leap orders. And then we got news that the insiders bought a ridiculous amount. By the way, $25 million from the CEO. That is not common for them to buy in the open market. So especially during a crisis, we saw like SMCI, for example, that nobody was buying that. None of the insiders were buying Supermicro computers when it was falling and had all of its issues. Here, they are very clearly buying and quite a bit in size. So this is a very good sign. And obviously we saw the gap up the following day because of that, and these whales are up a ton. I think the January calls are now up over 100% and about 70% on the call leaps, which is ridiculous. That's not even short-term calls, and these were up within a couple days. Overall, a ridiculous amount. So they've killed it in terms of their trade entry. Very rare to see this type of flow into UNH, hence why it was so interesting, and they posted on the Cheddar Flow account over here. So wanted to bring those things up because that was early on in the week. As for the current time period, going to the S&P 500 chart, this is the same drawing that I had from the last video. This is obviously a rough sketch, but in this case here, we said from last week, there's a potential for some type of a bounce from 5,856, this level here. And if that were to fail, then 5,700 5,778 would be the next bounce point, and that must hold in order for there to be continuation to a rally. So this is where all of the data I showed you earlier pairs with what I'm showing you here on the chart, and I'll show you in a second the flow, how it complements as well. So 5,778 has to hold going into next week in order for bulls to have a continuation chance. The reason I have this level, if you haven't been watching these videos, is I go on the daily here. This was the previous range low to this 3-month range bound price action that we had, this distribution that eventually ended up leading into a breakdown. This is the low of that. Whenever you have a range, especially a lengthy range in the market, doesn't matter if it's the S&P 100 or just an equity like Shopify, Meta, etc. Whenever you have a range, that range, once it breaks down, it needs to reclaim the range low in order for it to have a shot going to the range high thereafter, which of course our range high right now is about 6,102, which is near all-time high. So in this case, we reclaimed it. We never tested it though because it gapped up above, and then we continued higher, and then it finally dropped to retest it as of Friday of last week. We now have a successful retest of the lower end of the range, which means if that holds, the minimum target of it is 6,102. Now I have to reiterate, I said if. This must hold, like I said, going into next week. Otherwise, if this were to fall below 5,778, then we would see all the way back down to 5,570, which is the uptrend, the lengthy uptrend that I mentioned in those previous videos all the way back here where I wanted to see a breakout above. So that would be quite the flush. It would actually happen in an impulsive manner, in my opinion, because that would be a fake breakout back within the previous range. So bulls definitely want to see this hold if they don't want this to flush all the way back to 5,500. So that's the plan for this week. This is the area of risk. I'd say an hourly close under 5,778. Funny enough, you can see here, we never had even a 15-minute close below. Bulls were very decisive on taking it back above. So we don't want to see this breakdown Tuesday. And personally, if it were to break down, I actually think it would come from some type of a gap down after the long weekend. I believe it to be pretty unlikely that we'd fall during the normal trading hours through. It would probably be some type of a gap down. But regardless, that is only if it were to break down below. I'm personally optimistic. Yes, obviously a lot of retail is optimistic right now, evident based on the sentiment and even some institutions. However, there's an interesting risk reward component to this along with momentum. Obviously, momentum, super bullish right now, has been for a while since we had that dip, just continuous upside. And this could just be a mini pullback before continuation a lot higher. Again, risk reward is amazing here with something as close as 5,778. You're looking at about 30 points, 40 points of risk for a lot more potential reward. This thing can go all the way up to 6,100 if it has that continuation move. So you're looking at about 300 points of risk. It's like a 1 to 10 risk reward trade setup. Very rare to find that in the S&P 500. So wanted to share it here. This is definitely something I'm keen to trade this upcoming week. So one other thing I wanted to mention here, because of that tariff news drop, obviously Apple got hurt from that because of potential for 25% tariffs. So we did have this drop over here. It actually fell below my long-standing demand zone. This was a previous supply zone back when it was also range bound, similar to the S&P 500, although it was range bound even for a longer amount of time during this period over here. Finally broke out above, as you can see with this large green candle. Then it retested it, a very nice retest in the demand zone, and then bounced from there. So we finally broke down below it during this tariff fiasco over here. And now it's attempting to break back down below. That'd be very bearish if it held below. So we definitely want to see this reclaim. Interestingly enough, the flow based on Apple for last week was actually very bullish, 62.6% bull flow to 37.4% bear flow in terms of over 1 million in premium. But some of these orders were just saying like this, $3.7 million for the June 6th expiration. And this was at the money the time they got this print. That was a bit earlier on in the week. You can see here it was trading at 203 at the time and obviously closed 195. We'll see if they're still open based on the open interest come Tuesday. But then if you go to some of these other orders later on in the week, you can see 197 spot price, 2.1 million in the 200 strike for June 18th. And then a little bit further up over here, 2 million for the 220. So decent amount of the money at the time they bought it, since they bought it at 196. This one is a call leap, so a little bit extra time on that. But again, majority bullish across the board. Another call leap over here, 1.1 million for the 200 strike for June 18th of 2026. So a lot of bullish flow that we saw over here, and not many puts, all things considered. It was really just call sells that showed up in red on here, like 7.2 million call sell for the July strike. And the rest of these were likely monetization due to the volume of open interest you can see on it. So it'll be good to see if this continues into next week. If so, there's potential for the demand zone, now supply zone, to reclaim. And then this downtrend had difficulty above, potentially breaking out above. We need Apple to have some type of bounce from here if the market, the rest of the market, is going to bounce like S&P 500. So definitely want to see some type of a bid here if we are to see that continuation potential. Regardless, that's the plan for the market this week. Apple needs to get back above 200 to be safe, and S&P 500 needs to stay above 5,778 to be safe as well. Otherwise, below both, there's going to be some issues, likely to see some type of a flush, so impulsive manner to the downside next week. So that's the plan. And then last thing I do want to mention over here, based on Twitter and some of the news we saw there, if I scroll up a little bit more, we could see there was another insider trade, which, by the way, we will do one of those videos of all the insider trades from this year at some point. It's actually going to be a very long video because there's so many of them, but that will happen at some point. So thanks for all the comments on that. But you can see here, Wolf puts were added, and a ridiculous amount of them, 10 million into out the money Wolf puts, was added before they had the news of potential bankruptcy, and then it fell, as you can see on the chart over here, fell like 60% after hours, and they were up 150% the following day. So another insider trade. Crazy to see all of these happening. Never seen this many before based on the flow. And then the last thing that I do want to mention over here, we go a bit higher, is the Tesla calls we saw last week as well as the week prior. The week prior was mainly July calls. And then over here, we start to see some January calls at the tape. This is 9 million. And I believe there was another one that came in later on from over here. If I scroll up, actually, it was a bit earlier in the week. You can see over here, some of these, they're adding more Tesla calls just because they've been adding so many of them. This was more so short dated, but we still got another hit on the July. And also those Julys are very far out the money. You can see 475 here. The previous week, I believe, we could actually check as the last thing in the video here. The previous week was a little bit far out the money as well, but a lot of 440 calls here for July near end of the week. And as we scroll down, we can see over here, even these 350, 4.5 million in premium, 3.5 million in premium, 1.5 million in premium. That's a lot of premium, guys, even for Tesla for these January calls. So a lot of bullish activity last week, and I'll even show you the prior week over here. We can go back 12th to the 16th. We should see some of those July calls as well. So more January here. And then as we scroll down, yeah, here's those Julys, 445. So similar to the ones I just showed you from Friday, these have a 445 strike. Those Friday ones have 440. A lot of premium going into those. 435 over here. Again, super far out the money, guys. This is from 338 spot price that they're adding 435s, 445s, 440s now. A lot of premium going into those. You can even check the open interest from last week. A lot of these are still being held. So a lot of bullish activity there. And I'll just show you the chart as a final thing. But Tesla needs to continue to hold that 339.69 level that I have on it. We go to the 15-minute chart here. We can see that is the level it closed just a tad below. So I want to see some type of a gap up to reclaim it. There also was an old downtrend here. That's why I have that level, but kind of relevant now. What needs to break is this flag. That's what it's formed now. Flag formation needs to break out above 347.83. And if it does that, we'll see a very large squeeze. And not just because of the flow being very aggressive, but just because this is actually a very bullish setup. If we go to the daily chart over here, a ton of accumulation down here during the market-wide correction. And then we finally broke out back above this uptrend, very bullish to reclaim an uptrend. And now it's consolidating / flagging up here. If it breaks out of this flag, the minimum breakout target would be 384, in my opinion. And you can see here that is complemented by something like this type of flow. These are very aggressive bets. It is not common to see this far out the money with this much premium in terms of just a month or two until the expiration. So definitely something to watch. This is actually my favorite speculative bet right now in the market, is a bull flag breakout and continuation at 384. So that is something else I'll be watching this week. A little bit longer video than normal. Hopefully you guys found it insightful. Other than that, as always, appreciate you guys watching this video. I'll see you next time.